maybe 35 minutes.
Right.
So I wanted to talk today also about a program offered by the one I recommended is offered by the federal government. It's the program is called a reverse mortgage, and I just wanted to talk to seniors about a few tools that they may use to help them in their, and the tool that I would like to talk about today is the reverse mortgage.
Okay.
Because the reverse mortgage is it's a mortgage that allows a senior with no credit, no employment, and no medical requirements. As long as they are 62 years old, they own their home outright or have a mortgage balance that can be paid off, a low mortgage balance. They can be paid off at the closing. They can eliminate their mortgage. This can be used to, this tool can be used to pull seniors. A lot of our seniors are unnecessarily in foreclosure. This tool can be used to pull seniors out of foreclosure.
Yes.
And things like that. So we're going to switch roles now. And Josh is going to ask me some questions about the reverse mortgage. And then I'll do my best to answer any questions Josh might have.
Okay, Chris, great. So we're going to ask our reverse mortgage expert here, Chris Devin. Number one question, what is a reverse mortgage, Chris?
Well, first off, I'd just like to say I am an Illinois licensed mortgage broker for USA Mortgage. A reverse mortgage is a special type of home loan that lets a homeowner convert a portion of the equity in their home into cash.
Okay.
The equity built up over years of home mortgage payments is paid out to the senior.
Okay.
But unlike a traditional home equity loan or second mortgage, no repayment is required, the borrower is not required to leave their home. You can stay in the home.
Okay.
So HUD's reverse mortgage provides these benefits, and it's federally insured as well.
Okay. Okay.
Yeah.
Okay. Good. Good. So that's what a reverse mortgage is, and I understand that this is HUD.
HUD is the U.S. Department of Housing and Urban Development.
Okay.
It created one of the first reverse mortgages. It's the HUD's reverse mortgage is a federally insured private loan.
Okay.
And it's a safe plan that can give older Americans greater financial security.
Okay.
Many seniors use it to supplement Social Security, to meet unexpected medical payments.
Okay.
To make home improvements and things like that.
Okay. So the HUD program. So there is other types of reverse mortgages. I keep hearing you saying HUD. Is there other types of reverse mortgages?
Oh yeah, there are other type of reverse mortgages put out by companies, proprietary companies. And they're proprietary mortgages put out by companies that have their own mortgage. Yes.
Okay. Okay.
Or reverse mortgage program.
Okay. Okay.
And then Fannie Mae also has a reverse mortgage program.
Okay.
But for seniors, I particularly recommend the HUD reverse mortgage program because it limits fees. There are a lot of protections put in for the senior, which if as I said, I suggest that you check with your financial advisor, about these things. If you had any questions you want to ask me about, though, my number there is on the screen. As you can see, it's 312-593-4600.
Right.
I just wanted to stress, of course, that with all reverse mortgages, though, no credit is required on the part of the senior.
Okay.
No employment.
Okay.
And there are no medical requirements.
Okay. 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 Good. Once again, Chris Devin is our reverse mortgage expert. You can reach him directly. His direct number is 312-593-4600. Have any questions regarding reverse mortgage? How they would, benefit you and your family, definitely give Chris a call. More questions for Chris. Chris, we want to know that since this is an FHA HUD program, say for instance, if when I initially bought my house, the first mortgage I had was not FHA and HUD. Can I still get a HUD, FHA, reverse mortgage?
Absolutely, yes. It doesn't matter if you don't buy it. Your first purchase wasn't with an FHA insured mortgage.
Okay.
Your new HUD reverse mortgage will be a new FHA insured mortgage loan.
Okay.
Again, I'm not recommending any specific type of mortgage loan, but if you have any questions, you can always consult your financial advisor as well. But I want to say, to be eligible for a reverse mortgage, it requires that the borrower is 62 years of age or older, that they have a low mortgage balance or years of equity built into their mortgage, and they must live in the home. Okay. Your home must be a single-family dwelling or a 2 to 4 unit property that you can own and occupy. Townhouses, detached homes. Units in condominiums and co-ops. And some manufactured homes are eligible for reverse mortgage. Condominiums must be approved if you want to do a government program. It is possible for individual condominium units to qualify under the spot loan program. And then, of course, for all those seniors who live in mixed units, let's say you live in a commercial property, and you've got some apartments and then some retail or store. In other words, as long as it's a 50-50 mix, you've got half apartments and half commercial space,
you can get that
then you
done.
can get that, a senior can get that done. And what I wanted to stress was a lot of seniors these days find themselves going through hard times, and many seniors are unnecessarily losing their homes to foreclosure. As I want to say, we're just generally giving advice here. We are not attorneys. Of course, consult your attorney and consult your financial advisor. But a reverse mortgage is often a good way for a senior to pull their home out of foreclosure, eliminate their mortgage balance, so that they have no mortgage payment every year, which gives them much more freedom and latitude, and then pull their home out of foreclosure.
Well, excellent, Chris. I think Chris is very passionate about that. There are definitely a lot of seniors out there in our listening audience who, because of this mortgage crisis, are experiencing foreclosures. Chris can be reached at 312-593-4600. If you find yourself in that particular position where you are in foreclosure, want to get out of foreclosure, definitely give Chris a call. He can help you in that matter. And so that's a good segue to this question, Chris, because if the bank is going to take your house with a regular mortgage, can the lender take your property when you have a reverse mortgage?
Yes, no. The difference between a reverse mortgage and a bank mortgage or a bank home equity loan, with a traditional, let's say, home equity loan or home equity line of credit, you must have sufficient income versus debt ratio to qualify for the loan.
And what is the debt ratio?
Well, that means that your income must exceed your debts by a certain amount, a certain ratio, in order for you to qualify for the loan. But in a reverse mortgage, it actually eliminates the current mortgage payment that you have, and there are no such requirements. In the reverse mortgage, you are not required to make monthly payments. The reverse mortgage is different in that it pays the senior. And is available regardless of the senior's income, with no credit, no employment, no medical requirements. The amount that the senior can borrow depends on their age, the current interest rate, and the appraised value of their home. Generally, the older the senior is, the lower the interest is, and the more the senior can borrow. The senior does not have to make mortgage payments. The loan is not due as long as the house is the senior's principal residence.
Good. That's good. So we're going to recap here.